So it's starting to become more and more common to see stocks just get decimated after the earnings. Unity Software fell 37.05% at the end of trading today because they had an earnings report that the market wasn't happy with. Now, before we get into that, I wanted to touch on the VIX. This is a common measure of volatility used, which can simply indicate fear. And as you can see, back in March of 2020, the market reacted to the Rona, and right now we're about halfway to where that peaked. Although we're also hitting pretty much new highs in terms of what we've seen historically since that large peak. So there's a lot of volatility in the market, and we sort of need to distance that from stocks when we look at them independently and say, okay, how did a stock perform relative to its benchmark? Now, when it comes to Unity, it doesn't matter what benchmark you use, this thing has performed horribly. So if you bought Unity shares 6 months ago minus 1 day, you would be down 74%. So that wasn't quite the high, but it was up there in terms of where the stock price was. Then yesterday, or say, it depends on when you're listening to this, but the day that earnings dropped, the following day of trading, shares closed down another 36%. So the total 6 month drop from when you bought shares to when you hold them today would be about 83%. So when we say that Unity shares have gotten clobbered, that's certainly an understatement in terms of how badly this share price has performed over the past 6 months. Now, what we're interested in talking about today is the drop that we saw after earnings, which, depending on how you look at it, we all have the same information, right? We can go look at the SEC filings, we can listen to the earnings call, we can read the press releases. We all have access to that information. It's how you interpret it. So the end result of what transpired in that earnings call, because there was a lot of information in that call, the end result was that 2022 guidance dropped by around 9%. Now, there was a lot of banter about how specific quarters would be impacted. For example, the quarter that was just announced, Q1 2022, none of that really matters if you focus long-term on annual results. So the end result, if you're a long-term investor, was that 2022 guidance dropped by 9% on the lower end of guidance, and then by about 5% on the upper end of guidance. So the company, and I think this is probably the most important thing to pay attention to, said these two statements. The reason that they had this setback was because of problems that were mostly caused by internal factors, and they go into those. And this second bullet point here is very important. We see these challenges as temporary. We do not expect them to impact future prospects of our business beyond 2022. So right now you can pretty much close the book and say, all right, they had some internal problems short term in this year. Their guidance has dropped by 9%, but they don't expect that to impact their business beyond that. So for a long-term investor, this is just a small blip, but we can take it a little bit further. So the company does that and goes into specifics about these issues. And the first relates to this audience pinpointer tool. And if you're interested in the details, you can read that earnings call, and they explicitly talk about what these tools do and the nature of the problem. And then the second bullet point says that they ingested bad data from a large customer. The impact to the business was approximately 110 million in 2022 with no carryover impact to 2023. The CEO describes the business. He says, if you can think about the most data heavy business out there, our business beats that by a lot, because Unity is essentially dealing in their own virtual world, so they can capture so much data there and they can know so much of what's going on that everything becomes data driven. So when they have a data problem, it impacts their entire business, which is dependent on the accuracy of data. So your artificial intelligence algorithms are only as good as the data that you feed them. So having a bad data problem for a firm like Unity is a big deal. Now, the most important thing in software, if you're sitting at the top and somebody brings a problem to you, is to say, make sure that they sufficiently understand the problem and make sure it won't happen again. That's about root cause analysis. That's the most important thing. And the firm talks about that in their earnings call. They mention here monitoring, alerting, and recovery systems and processes to mitigate future complex data issues. And that's exactly the sort of language you want to see them using. So throughout that call, everything that they talked about seemed on point. Now, this raised an interesting question. If you're a firm that has a big internal problem, and lots of these firms do, may not see very many of them, but a lot of them do you talk about it in publicly? And when you do that, you really name and shame various units or sub-organizations within your firm, and that's a decision that you have to make. So there's an internal impact there. That technical detail, though, pacifies the technical analysts who want to know exactly what happened, as much detail as possible. The problem is that if you keep giving them too much detail, it invites more questions, which can also be problematic. So in reading through this earnings call, it seems like Unity gave the analysts and the investment community a sufficient amount of information, probably even more information than they needed about these problems. Now, what it all boils down to is this. We wrote a piece on Unity, and I'll put that in the description of this video. This was earlier this year and talked about how they're a pure play on the metaverse. This is around the time that everybody started getting excited about the metaverse yet again. And what we did here is we had taken the guidance, the chart that you see above, that's the 22 guidance that the firm had laid out prior to this earnings call. And then below that, you can see the guidance laid out. So if we're just looking at revenue, there's a drop of 9% on that lower end and 5.4% on the high end. So really they've extended the range of where they can hit. You can see the second line item there talks about the change in year over year revenue growth. But if they hit that midpoint at their new guidance, that's like 25%. That's not bad for a $9 billion firm. So certainly nothing to sneeze at. And then in relation to the loss from operations, so we'll talk about that as well. So there was a lot of good news in the call. For example, they had the highest quarterly revenues ever recorded at 320 million, net retention of 135%. That's above average for a SaaS business. And the number of customers paying them more than, that should say 100,000, surpassed 1,080, up 29% from the year prior. And then this statement was really interesting. They said, we believe we will achieve profitability in the fourth quarter of this year, which is sooner than previously communicated. Well, that's great news, especially now that the markets are getting hammered and access to easy capital is drying up. For a firm to say that they're focused on profitability and they expect to hit that, investors need to hold them to that. And that's some great news. Now, when we look at the valuation of this firm, you can say, well, shares have gotten beaten down so much, there's no way they could sink further. Well, they certainly could. So here we've taken our tech stock catalog and pulled out a handful of SaaS and let's say pure SaaS and some SaaS businesses. That's a flag in our catalog. And then we've taken the Q4 revenues and we've calculated the simple valuation ratio, which is simply the last quarter revenue. In this case, we used Q4 2021 all the way down the list. The last quarter times 4, so you annualize it, and you take market cap and you divide it by that number, and it gives you a ratio. And you can see here where Unity sits, fourth from the bottom there. So, they're around the same valuation as C3 or Darktrace or Schrodinger. So could shares fall further? Absolutely. And I think that as everybody sees in the market that we're observing today, that trying to call a bottom is futile. Now, just to conclude on Unity, as we said earlier, we all have the same access to new information. It's how we interpret it. And we interpreted that earnings call as being very honest and upfront about the problems. And if management speaks the truth in that call, then we believe long-term investors have nothing to worry about. So please leave your comments in the comment section. Go ahead and subscribe to our channel. And thank you very much for taking the time to watch this video today.